some economic data come out on the East Coast, and I'm over here testing a new algo. As a matter of fact, if you're in the Algo Factory private chat, you got to see the result of that trade. I didn't post it last night when I took it close to midnight because it's a test trade. It's something that I'm just, it's a newer algo. And, I didn't want anybody to get overly excited and start to do research that looked like mine and take a similar trade based on their own research because just it's a test trade. So, I had like a quarter position size on it. But man, what a beautiful trade. I saw an uptrend and I caught the very bottom of the uptrend. So before I even get into this beautiful trade, I'm just going to throw up a QR code. And if you are new to this channel, hold on, let me get it. I got to do one quick thing here. Hold on. Get up out of my chair. So if you're new to this channel, you can go ahead over to this website, algofactory.tech, zap that QR code. I'll give you a second to write that down. You see who we are, what we do. We help people become traders and build trading algorithms or trading methods. It doesn't have to be fancy. Even old school trading works just fine. And I'm going to go ahead and flash this stuff near the end so we can talk more about who we are, what we do towards the end of the show here. But let's go ahead and talk about this trade and what happened, plus the data that just came out on the market. So if you look at this trade, and let's see if, okay, good. We got a few people watching on the private show. All right. This was an uptrend. And basically the euro on a higher time frame was making a turnaround, right? It had been ranging, and I actually kind of was testing this algo, and it didn't, algos a lot of times in a ranging market, you have to have a very specific kind of algo to work. But what we had was definitely higher highs, higher lows. So we're in an uptrend very clearly. And I had gone long right about where this arrow is yesterday. And had I stayed in my trade and trusted my algorithm, I would have won the trade, right? And I would have had even better. Well, actually, the risk to reward on this next trade was actually better than my original trade. But still, no, that's a lie. The first trade was like a 7-1. But I didn't trust myself on it. And I was kind of listening to somebody else. And that somebody else was not wrong. But long story short, I went ahead and re-entered the trade right here. And I could have even gone for higher targets and done just beautifully. This long candle going down, you can see, is based on some data that just came out. So that's fine. But, I caught this thing right at the perfect spot. And what I've been looking for is, technically this is a continuation trade because the trend was an uptrend. And I caught a pullback on an uptrend. And I like continuation trades because you just get a lot more, right? In fact, what we'll talk about just is the difference between a continuation trade, a trend continuation, and then we'll talk about a reversal trade, trend reversal trades. And I know people who have made entire careers, professional traders, on reversal trading. It is not a bad thing to do at all. It's a great way to go. I am not talking trash on it. And there are more opportunities with reversal trades, it seems. But continuation trades, there's just a higher probability win. You can get more risk to reward out of them, in my opinion, but you have to be willing to kind of go against structure a little bit, right? So there's these advantages and disadvantages, and I'm going to diagram this out first, and then we're going to use examples. But I just wanted to show people who are watching this beautiful trade right here, and we'll come back to that during our private group so we can really analyze that. So let me go to a different chart altogether so that we can talk about the difference between these two without really screwing up all the charts. Okay. USD JPY. I'm not messing with anything now. Those are some of my alerts for the algo, but I'm not going to, in the middle of data coming out. We got more data coming out in an hour and a half. And then once that data is out, look, it's going to be Friday. Volatility is probably going to fall off a cliff. I don't plan to do any trades necessarily today unless it just really is like, hey, look, that's a real easy trade to take. And, let's see. We got a short on USD JPY 30-minute. We'll just take a quick look at it. See what it says. Okay. Yeah. Okay, so everything is pointing towards longs on this right now. Yeah, this is all the alerts I'm getting right now are all very data driven. Certainly. Look at that. This is the JPY. Okay, so yeah, see, I said yesterday to everybody on Algo Factory, watch, this is going to pop right back into the pattern, and look what it did. There was a bit of information before we get into trend trading and not trend trading. First of all, the trend on this is clearly up, but this is something I drew during the show like 3 or 4 days ago. And this is on the JPY on the 3 hour. This is going back to like August. One thing you'll notice is that this is a weakening kind of, it's an uptrend, but it's weakening. And you have these dips, these jumps down out of the trend. So we can actually amend this a bit because you can see this is becoming a little, it's giving itself room. What's happening with the Japanese yen from a fundamental standpoint is, they have yield curve control over there, and that's a long story, but that's the way that they control their bond market is why you see the Japanese yen doing what it's doing, right? It just continues to go down in value, the JPY. It's continuing to get weaker and weaker, and that's because of the way that they control their bond markets called yield curve control. And we kind of do that in a soft way here. Janet Yellen in the U.S. is doing that, even though it's not her job. But there's a long story there. Tom Luongo does a really good treatment as to why he thinks that she's doing that, but we're not going to get into the theory of that right now. The point is that in order for this to work, the Japanese, in order for this whole like pattern to kind of stay afloat, the Japanese have to control what's going on, and they have to let these little pressure reliefs happen. So you get these dips down, these hard dips down, just to kind of reposition and allow for the trend to continue. And these dips down are usually Japanese talking, saying that, okay, we're actually going to let the yen appreciate. And then it does, and then boom, they right back into the yield curve control, right back into weakening the yen. But if you see the general trend, it's kind of asymptotically approaching this top bound here. And if I were to zoom out a bit, we would find that that's actually going to be towards a prior high, right? So it's approaching this prior high that happened during the pandemic or shortly thereafter. Well, it was last October, actually, about a year ago, they hit this high. Price is approaching that, but it's kind of like losing energy. And depending on who you listen to, at some point Japan's probably gonna say, screw this, we're done, we're gonna protect the yen. And again, Longo said it pretty well. He says they got a lot of money in reserve. So at some point, everybody who thinks the yen is gonna get just continuing to get weaker, when everything flips over to the new kind of economy, if you will, or the new situation, or the new whatever, the new paradigm that we have, whatever the next paradigm we see is, everybody going short on the yen is probably going to get hurt, because at some point they're going to go ahead and protect their currency. That's his theory. And Tom's good. He's a smart dude. I listen to what he says. Sir, definitely. I think he's got a good head on his shoulders, man. So anyway, we're just kind of looking at that. But what we really wanted to look at was trends, right? So back to the topic here. We got trend trading versus reversal trading. Okay, so I'm just gonna open up one of these, get some blank space, and then we're gonna look at the two, right? So this, I think I cover this in our Algo Factory videos, but when you're in a trend, it's easy to identify. An uptrend has higher highs, an uptrend has higher lows, and a downtrend has lower lows, lower highs. Okay, and you can say that either way, lower highs, lower lows, whatever, right? It's lowers, right? So when price is heading up, you got a higher high here. Let's post out some lines, make this easy to see. You got a higher high here, higher low than before, higher high, higher low than before, higher high, higher low than before. That's your uptrend, right? And obviously your downtrend is going to have lower highs and lower lows in the very same fashion. Okay, so whether you're trading up or down, the trend trading is you're trading with the trend. Now, what will happen on trading with the trend is if you can identify a trend, usually you're already up in this kind of area because you have the higher highs, higher lows, and you now have the second higher high, right? So you're now in an uptrend. Actually, you technically can verify you're in a trend at this point because you've broken that high and you've made what is going to be a new high. You know you're in a trend once price goes up, makes a pullback, breaks the prior high. Now you are in a trend, right? In a higher, because now you have a higher high, right? Now, if that low goes below, then you violated the new uptrend, and that's a whole nother conversation. But once you're in that trend and you're looking for a pullback, if you can identify the next higher low, then you can identify a nice pullback to take a trade, and you have a trend. You know the direction that things are going. So one way to do that is now you'll always want to use structure in the past, right? So let's say that price was like right here, right? Let's say that this rest of this hadn't happened yet. So let's redo this as such. Okay, we're just going to mimic this. But this is where things are. Things haven't not gone past here, but you have identified an uptrend. Maybe you have some algorithms that are helping you know that the trend is intact besides just price action, whatever it is. And you want to go ahead and predict the price is going to go up and you want to trade as such. Well, you can sort of have the idea that price is going to pull something like this, right? And then eventually maybe continue. But what matters is this first part of that, where you're going to try to catch a profit on the way to this next high. Okay, now that being the case, there's a couple ways to do that. Of course, you're going to look at old structure. Like we could even use this as an example, and we can pretend that price made its way down here from where it is right now, just for educational purposes, whatever. And we have this structure right here. Well, okay, we probably don't want to go past that, right? Because that structure is there. Maybe we're going to pretend the price went down from there, right? Like this actual real price action is part of our chart, so we're going to pretend that things went like this, right? Just like that. So now that we have this idea in place, we're going to want to take profit, of course, before the structure. And then, of course, how do we estimate where it might go besides having structure and using a particular range tool that we use at Algo Factory? Sometimes I talk about it on here, sometimes I don't. Most of the time I tell you have to be a part of Algo Factory to learn it. Other times I talk about it. But long story short, what we can do is we can look at this trend and we can use what's called the fib extension tool. And we map out this impulse up from the bottom to the top, and we go back to the bottom and click it. And then we have some fib extension numbers, the 1272 and the 1618. And the 1272 and 1618 are good numbers. Price usually goes to these. When it comes to Fibonacci, why does price do that? No one really knows. Is it a self-fulfilled prophecy? Is it because everybody's looking at fibs? No one really knows. Is it something about the universe? I mean, the Fibonacci numbers occur in nature, they occur in plants, they occur in our body. Yeah, Fibonacci, like the segments of your fingers or Fibonacci length. It's, it could be some magical thing, but whatever it is, we know that these numbers are generally obeyed. And then structure usually is obeyed in front of these numbers. So for example, we might say we think price will go to this 618. Maybe we think this move up will continue higher, but this structure is in the way. So the way I do things, structure trumps Fibonacci's. Fibonacci's are good as a general confluence, as a general way to know where price might go. But in this case, structure is going to be more important. So I would take profit just below the structure, below the Fibonacci that I like the most, which the 618, the 1.618 extension is where price tends to want to go. And I could take out some profit here at this 1.272 or maybe just below that. So these are my two areas, and where I would take profit. I might even front run that structure just a tad like this. And then that's how I would plan my trade. And I would go ahead and go long. right here as I confirmed using my algos, whatever my method is. Maybe you're using price structure. There's ways to do that based on prior price. Maybe that's why you like this area to go along, but I'm going to go along here based on whatever my reason is. I'll have my stop loss based on whatever logic I usually use. And then I'll go long to these targets like this. And I'll take my first profit right here and my second profit right there. And that's how I will do a trend continuation trade. And this right here is something where, if you're in the chat right now, I know we're still a pretty new YouTube channel. We haven't advertised or done any of the SEO stuff yet. So there's not a lot of people watching to ask questions. Even if you're not an Algo Factory member, you can ask questions about this. If you're watching this and you want to ask questions about it offline, like on YouTube, say, hey, I want to know more about this, do another show on it. Like, that's acceptable. If you're, of course, in the chat, we're in the beginner live lab. So, I mean, we actually have a decent amount of people watching in there, but if you want more questions answered on this in the live lab, we can answer it after the fact. If you have questions now, ask them, because I'm going to move on. We're going to compare this to the actual trade. All right. You see how this works right here? So this is the theory. This is the theory in action, right? Uptrend, pullback. Structure was actually way up here. But I went ahead and was conservative with it. Although I think my original like super high target was going to be up here, but the 1.618, I think, was what I was interested in. I didn't care to go past that because I knew that data was coming out this morning and I didn't think price would make it all the way up there. And sure enough, I'm not exactly sure if this is where my target was. I think I used the top of the body of this candle here at the top of this. Like, that's my original target. Obviously, though, I was concerned the price might not make it up there due to the data coming out this morning. And so I chose the 1.618 right here, because if I do the fib extension from this prior thing right here, you can see that this matches the, actually, I did a 1.272. The 1.618, it technically would have been a good target, and you can see price pierced the 1.618. I could have gone for that, but I was conservative because I was putting this trade on overnight. So, because I'm not managing that trade, I can't, I woke up to this profit, which is just awesome. You gotta love waking up to profit. This took profit about an hour and a half before I woke up. Now, had I taken that 618, I would have had a nasty risk to reward. It would have been a very big win. It was still a very big win. You can see the risk to reward for those of you who understand that. This is a 4.2 to 1, although I took off some of the profit beforehand. And to talk about taking some of the profit off beforehand, Rikuku has a question. On your TP1 plus 2, is that all on the same order, or do you have two separate orders with separate PP? I have two separate orders. So the way that I do that is that on this trade, let's go over to our example to make it cleaner. On this trade, right? If I want to take profit, what I do is I would have an order that's like my regular order. So I would have my my regular order is going to have the entry. Increase this here. So you'll have your entry mark, and then your regular order will also have your stop loss with 100% of your, of the actual position. And then your regular order is also going to have a stop or a take profit with 100% of the position, right? So it means that your take profit is going to be as if it's the only take profit. So that's your original position with your order cancel order. This is getting a little more into the advanced, but Rikuku knows what I'm talking about. So he's, we're going to answer an actual question for one of our traders. So this is your trade, right? You do the trade as if there's no take profit one. You have your stop loss and your take profit, and you just do it as if you were not going to take any position off. And then what you do is a second order, a separate order. Now, this is how it's done on Oanda, and it's how it's done on TradingView's API to Oanda, and it's how it's done on TradingView's API in general, I think. But what I would do is a second order. It's going to be not a take profit. Technically, it will be a take profit. the take profit, but the way the order is it's an actual sell order. It's a limit sell order for 50% of the position. So, so the way that it works, and that's what this line is right here. So it's a limit sell order for 50% of the position. Rikuku, if you understand that, let me know so I can move on. If you don't understand what that means, I'm going to explain it a little bit. If you don't understand it, then I can take a little more time on it. But long story short, what this means is that Owanda does units, right? It's like, oh, you have 100,000 units on your trade or whatever. So in this case, your entry is going to be at 100,000 units. Your stop loss is going to be 100,000 units. Your take profit is going to be 100,000 units, right? But when you do a limit sell order, you take those units, you divide them by 2, and you just do a limit sell at that area you like with half the units, and then it takes off half the profit. Now, if you want to take off a third of the profit, then you do a limit sell for a third of the units, right? So we can actually do a like a paper trade, you know, if you want to see this. But okay, good, you understand it. So, okay, so that's a continuation trade, and that's how that works, and that's how to take multiple profits on it. Now, what we'll do real briefly is talk about a reversal, counter trend trade, as one of my mentors talks about. So let's let me not do it this way. Let's talk about the trend is up, higher highs, higher lows. Okay, trend is identified. And the counter trend is where you're trading against the trade. So you're taking little bites out of the trend, right? So price is going to reverse, and let me do it this way. Price is going to reverse, and you want to take this trade right here. And it's very takeable. It's harder to take those on a low time frame because of the spread. And that's a whole nother conversation. But you know, this is a smaller trade. You know, your trend continuation trades like we just took are going to look like this, right? More or less. It's gonna be this nice long trade, which is why I like them. There's a lot more room for profit. And I do like to trade low time frames, but your trend reversals are going to look like this. It's going to oftentimes be closer to 1-to-1, you know? So you're not going to have as much room as you would in a trend continuation trade. And because you don't have as much room, the spread can be a problem for you, right? If you're trading low time frames. Now, if you're on a higher time frame, then that's another story. That being a trend reversal trader, in my opinion, makes more sense because, you know, I like to trade like the 5-minute. You know, this is what I do. Most people are not doing that, though. Most people are not trading the 5-minute. They're trading like the 30-minute, the hour, the 4-hour. And then when you come up to the 4-hour, it's like, okay, this is a pretty reasonable thing to do, even on the hourly. Hourly, I think, still is considered a day trading time frame. But, you know, swing trading makes more sense. Long story short, you're trying to kind of take this move. And a quick way to do that is using a Fibonacci retracement instead of a Fibonacci extension. You're going to do a retracement of this impulse up. So this one impulse up right here, you're going to go from the bottom to the top with your fib tool, right? And then you're going to have your 618 is the most likely place for price to go. Plus you're going to have structure. If you're really confident in this one, you can take some not extended, but you can go with the 786 if that works for you. And one of the reasons that might work is because we have a particular tool that I sort of mentioned earlier. It's a range tool, and so you could do a range look on that same exact impulse and see if the conditions line up for you to take a deeper Fibonacci target. But the Fibonacci is going to be for confluence. If there's no other data, say if you're trading something that doesn't have the proper data for the range tool to work, then basically, and I'll give you a clue, it's volume. So you're trading something that doesn't have a volume metric, then, you know, fibs are kind of what you have to rely on, fibs and market structure. So, you know, like for example, in this case, you see how this price came up to here, right there. Well, it might be hard for price to go below this, right? And then you have to make sure that you're measuring for that. And now you're at an inverse risk to reward if in fact this is your stop loss way up here. Now it might be your stop loss is like right here. And even though this is a little tiny bite out of things, you can still make money. It just depends on, like, on a higher time frame, this can work, but on the 5-minute, not so much. So it really depends on the price action, depends on your methodology. But using that fib tool, and like ideally this is going to be like way down below the 618, and your, everything else kind of matches up, and you can go ahead and take that trade down low. But that's, I mean, I love, dude, like I said, I know people who've made entire careers out of trend reversals. It is not a bad way to go. There tend to be more opportunities. There also tend to be more stop outs in my experience. That might just be because I need to make a better reversal algo. It's not necessarily that there's more stop outs just because it's reversal. It's just that the extension, the trend continuations, you're trading with the trend. And it's a pretty common thing to hear in trading, the trend is your friend. But let me tell you, if you develop an algo that is counter trend that works out really well, then what the heck, do what your algo says. That's the beautiful thing about trading, is if you go through the charts, you use our system to map out the way you like to trade, and it ends up being part of your personality, because that's just, trading it's a very personal thing, believe it or not. Like, for example, it's not in my personality to hold a trade for 4 months. It's just not. I want to be in and out. I got things to do. I don't want to let it sit there and go. Some would argue, I got a pro trader buddy who's like, nah, just let it sit there. It'll be all right. You'll get used to it. Maybe he's right. But at this moment, that's not in my personality. So long story short, that's, if I'm going to be in something for 4 months, that's an investment. That's like, okay, I think this is something that I fundamentally like. And, I think this earnings is going to come out but trading is personal. And with our system, as you go through, we're going to teach you the nuts and bolts of it. We don't do investment advice here, of course, but what we do is we give you the basics of trading. We kind of point you in the right direction. We also have a 24/7 room where people all around the world are in it. Our community is worth the $49.99 alone, just to be in with the community, because you can ask questions, people will answer it. We have people down under. We've got people in Europe. We got people everywhere. So, we are definitely worth this. Look, based on our competition, we should be charging closer to $300 a month. And I'm going to tell you right now, there's a decent chance that we are going to see some economic turmoil in the next year or two. What usually happens is war happens at the same time as economic turmoil. And some would say, and I'm one of those, that actually it's a result of economic turmoil. When there's economic turmoil, the big dogs stop making money like they used to. So they're going to fight each other to reposition everything to make more money. When the economy is good, everybody gets a piece of the pie. Everybody can make money locally. No one has to reach across the ocean to do it, for the most part, or at least they don't have to do it as much, or they don't have to fight over each other's territories. But when things get tight, when things change, and we're in the middle of a very big change right now, that's when you're going to see the turmoil. That's when you're going to see the war, and we're already seeing it happen. And as that happens, people's job opportunities are going to be questionable. So this right here has become a way for me to earn money without having to worry about being fired or my business being shut down because of some, invisible thing in the air that people are scared of, and they have to put clothing on their face to, supposedly stay away from it or anything like that. I can sit at home and do this. No one's going to fire me. And all I have to do is I put the work in. I put in all the work it takes to develop my algorithm. And I'm going to tell you right now, it's a lot of hours. It's a lot of time. This is not a get rich quick, but I can tell you that if you put in the time, the probability is very high that you will be successful and you'll have another income stream. And many people that I know personally have went ahead and that is their main income stream. That may or may not be the way to go on this. That depends on you, your personality, your situation, your skill set. But either way, to have a separate income stream, that's always a good thing. And, we just provide the nuts and bolts on how to do that. So head over to our website, algofactory.tech, zap that QR code, come visit us. If you're watching this YouTube, leave a comment, please. Subscribe, notification bell, all that stuff. And come join us. Come see what we got going on. www.algofactory.tech. And I'm going to hop off YouTube. Much love.